What is happening, guys? Welcome to another Hyve trade breakdown. Today I got gold on my charts again. I know it's bank holiday, however this is the benefit of having access to volume, because I can see whether or not there are buyers and sellers in this market. So basically I've been on the charts, I've been on and off the charts today, but I've noticed that basically while price was pushing up, we had some nice distribution here. I didn't take this trade. This was just a trade I would have taken if I was trading, so ignore that. But basically what I did see was I saw distribution on the chart, so I was waiting for some aggressive push, and that is basically what I saw here. Price basically broke below this whole distribution area, and we saw some aggressive selling to the downside here, and you can see it's broken the daily VWAP. It's also broken previous day value area high, and also the market profile high of yesterday. So I'm expecting price to basically trade down to at least the previous day market profile as well as the weekly profile here. So I'm shooting for price to basically go all the way down. If you look at the footprint chart, you can see there is that selling candle, very bearish with a lot of imbalance to the downside. So let's see now if basically price can continue to push down. You can see basically my stop loss is quite safe behind the previous day's value area high as well as the VWAP and the market profile. So let's see what happens here. I'll be back with an update, guys. Okay guys, as you can see, we've just hit that 1-to-1 level. So what I'm gonna do now is basically just move my stop loss to break even, as like so, and right now I'm gonna move the targets. So you know me, guys, typically I would shoot for a 2-to-1. However, I do feel like this weekly level will be quite strong. As you can see, price was hesitant to break through this level before, so now I'm just basically going to make sure that I stay conservative with my targets and basically take out a 1 to 1.6 here on this one, rather than a 2-to-1. But I do believe price does have the potential to go all the way down to the weekly point of control, but being that it's bank holiday today, there's not that much volume, not that much momentum, so I'm going to be very conservative. I would have preferred to, get in somewhere around this high. However, I did not see any convincing selling volume for me to get involved in a trade up there, which is why I decided to get involved in a trade from this point down here. So guys, the trade is currently risk-free. Let's see if we can have that nice push to test this weekly level, and I'll be out for this trade. One thing, guys, before I go, basically that I wanted to bring to your attention is, if you've watched one of my earlier videos, I talked about how a lot of times when it comes to Wyckoff schematics, be it distribution or accumulation phase, what you tend to see is they tend to come in form of like a head and shoulder or upside down head and shoulder if you're looking for a bullish move after the accumulation. But in this case it was a distribution. So what you can see is we had that shoulder, the left shoulder, then we had the head, and we had another shoulder, and this was basically the neckline, and you can see how price reacted on that neckline here, and now price has broken that neckline. So that was another additional price action that made me get involved in this trade, because today I honestly wasn't trying to get involved with a trade, but I saw so many confluences in this on the chart. That's why I basically got involved with this one. And so yeah guys, that is just another thing to note. If you are a Wyckoff trader, sometimes they do come in form of a double bottom, double top. Sometimes it could be a head and shoulder. Other times it could be a triangle pattern or a flag pattern. That is something to just take into consideration, guys. I just thought I'll add that there, and bring that to your attention. But anyways, guys, I'll be back as soon as price hits take profit. Okay guys, let's take a look at this trade. So it's the following day, and as you can see, I got stopped out at break even after price got to a 1-to-1 risk to reward, but that's fine. But the main reason why I wanted to break down the rest of this trade is because just to show you the effectiveness of this neckline and this value area that I had marked up on my chart, as well as this aggressive sellers. As you can see, when price stopped me out at break even, we had multiple tests of this neckline here. We had kind of like a double top and price couldn't break, and then now you can see that we've pushed down. And as you can see, where my target was, if you remember correctly, rather than shooting for the 2-to-1, I decided to settle for 1-to-1.6, which was around this area. Although price didn't get to that level, what I wanted to show you was if I did decide to not move my stop loss to break even, which I would never do, I prefer leaving my stop loss at break even, just because when price came back it could have stopped me out. But that's neither here nor there. What I wanted to show you was basically the effectiveness of managing your stop loss based on levels, right? So as you can see, when price came down to this area where I adjusted my take profit to, you can see how price immediately reacted. And where did it go back to? Went back to that same level that we had the aggressive sellers, as well as the head and shoulder neckline, or the distribution neckline, and you can see price reacted from there. Then we came back down. So guys, I hope you've taken one or two things away from this video. But if you have, smash that like button, smash that subscribe button, and I'll see you on the next one.